Hi there, I'm Tyler Bollhorn from Stockscores.com. This is my weekend newsletter, the video version of it. If you would like to subscribe to the free weekend newsletter, go to Stockscores.com, go to Products, Newsletters, and here on the page there is a free sign up and you're welcome to do that. We send out this newsletter each weekend, although I am doing video versions of it and uploading those to YouTube. This week's newsletter discusses the difference between trend reversals and simple pullbacks. Here I've drawn a chart, or I've drawn some lines on the chart of VO listed on the New York Stock Exchange, because this is a good example of a stock that is setting up for a trend reversal as opposed to the pullbacks that occurred earlier in the trend. For example, we had a pullback in here, we had a pullback there, but these really define the long-term upward trend line. Notice also that the tops on this chart, as we go from left to right, are not rising as quickly as the bottoms. This sets up a chart pattern called a rising wedge. And you can see that on Friday, the stock not only broke down from a rising wedge pattern, but it also broke that long-term down upward trend line. And that's a good signal that this stock's trend is reversing. It may simply go into a sideways trading range for a while, but it could also have a pretty strong downward move out of this breakdown. Now, stocks like this are worth short selling because the risk-reward relationship is pretty strong. If you were going to short this stock, you would put a stop-loss order right up at the highs there. Your entry price, of course, would be there, and you've got probably the ability to see the stock fall down into this range, which gives you enough downside to justify the trade. Now, if we contrast that chart with this chart, which is of Google, you can see that the upward trend line has also been broken on Google. The difference, however, is that our distance up to where our stop-loss point should be, which is at the last inflection point high, is quite a bit farther than on the last stock. On VO, we had a fairly tight range. Here we've got a very wide range because Google has been falling in price for the last couple of weeks. That means in order for us to get double reward for the risk that we have to take, the stock has to fall all the way down to this green line. That's $400, and that's a long way to go, and I doubt that it will actually do that. And so my thought on Google is you don't short it here, although it has given us something of a sell signal, and I would probably be looking to get out of the stock. Now let's finally take a look at some of the index charts. This is the S&P 500 Exchange Traded Fund, symbol SPY, and this is a tricky one because you can draw the trend line in different ways. If you start at the March lows and cut across the bottoms, we see that that line really was broken this week, again from a rising wedge pattern. But more recently there have been a number of lows made which really form that upward sloping channel. So you may see some short-term bounce back in the S&P 500 this week. I wouldn't be surprised to see it bounce higher before it goes lower. I do think that the S&P 500 is topping out here, just as I do with most of the exchanges, but that doesn't necessarily mean they're going to go into rapid decline. They do have some support in this area, and you may see some of these indexes just go into a sideways trading range in the near term. Now, one of the ways that you can find stocks that are breaking their upward trend lines with an abnormal move to the downside is using a strategy that we have on the Stockscores market scan called reversal of fortune. I can click on that here and then run the market scan report. It goes through every stock in North America and looks for stocks that are strong but had a very abnormal day to the downside more recently. I can then look at the charts of those stocks by selecting all and click on Go for Gallery, and it will now take me through the charts of these stocks, 10 per page, and I can try to find those good chart pattern setups where there is a break of the upward trend line, but also enough downside reward potential to justify shorting those stocks. This is how I can find stocks like the VO, which I showed you at the top of this video, as well as there's a number of other opportunities in this particular strategy this week. Well, I hope you've enjoyed this week's online version of our weekly newsletter. To read the actual newsletter, again, go to Stockscores.com, go to Products, Newsletter area. You can read the newsletter online, as well as subscribe to it as a free subscription if you would like to keep that newsletter coming to you each week to your email address. That has been the Stockscores weekly analysis for January 23rd. Hope that you have a great week in the market and you trade well.